a credit crisis pushing the U.S. to the brink of a recession, the Federal Reserve today took more aggressive action, slashing a key interest rate by 3/4 of a percentage point. The latest action brought the federal funds rate, and that's the interest that banks charge each other, down to 2.25%. That's the lowest point since late 2004. Facing a recession, what can individual investors do? WHAS 11's Joe Arnold is here with one financial planner's advice. Joe?
Melissa, that rate cut is designed to increase spending by making it cheaper to borrow money and then increase liquidity in those tight credit markets. It is the latest signal of some very tough economic times. And while many financial planners often suggest to stay the course and ride out a troubled economy, Matthew Dicken of Louisville says especially if you are near retirement, you may not want to stand pat.
Well, I think in some cases that might make sense. You certainly don't want to have a knee-jerk reaction and panic, but what we have to do is take a look at the averages, and we cannot deny that the market on average, when we have a bear market, goes down 38%.
38%. So far, the stock market is down about 18% from its October high, so Dicken says the potential is there to double your losses. That's why he suggests moving to some safer investments that have less upside, but at least you're not losing any money. For information, by the way, on some free financial seminars for your workplace, you can log on to WHAS11.com.
Thank you so much, Joe. And the economy is the subject of our latest exclusive survey, USA WHAS 11 News Poll. It finds that 2 of 3 Americans believe the United States is already in a recession. 1,200 adults across the country were asked if they worry that the U.S. is headed for an economic depression. Nearly half, at 48%, responded they worry a lot, compared to 15% who says they don't worry at all. 1 year from now, of the adults polled, 29% think the nation's economy will be stronger than it is now. 38% believe it will be weaker. Looking farther down the road, 55% of the 1,200 adults surveyed say they worry a lot about having enough money for retirement, compared to 15% who responded that they don't worry at all.